Welcome to Home Buyer's Money Map. In our last episode, we unpacked the down payment. And today we are going to dive into another area that caused a lot of headache, which is kind of getting pre-approval, understand what the stress test is, and just basically how do we qualify for a mortgage. In terms of, let's start with stress test. How about that? Yeah. So what is stress test? Like people, of course, hear it and then say, "Oh, it's harder to get mortgage now." What is stress test?
So back in 2018, the Canadian government thought that people were qualifying for, and I know this because I was doing a lot of it. People were qualifying for the absolute maximum mortgage amount that they could qualify for, and at the time, you would qualify just based on the interest rate that you were getting. So let's say your interest rate was 4%. It was a percentage of your income, or like the payments that were associated with that interest rate, and a percentage of your income that could be attributed towards. And that's what you'd qualify for. What the government wanted to do is they wanted to make sure that, hey, you're qualifying for this at 4%, but what if we went up to 6%? That might get a little scary, and then people might not be able to afford to make their mortgage payments anymore. It's almost like they had the foresight that something might happen. So as much as it bothered us at the time, because it reduced a lot of people's qualifying power, it's as much as like 30% in some cases, it actually was really what helped us through the like massive inflation that we saw over the pandemic.
Or even now, actually.
Or even now. So just to clarify a little bit about what the stress test is they're basically saying, you should be able to qualify for whatever your mortgage rate is now, plus 2%. Mm-hmm. So if your rate was 4% today, you need to be able to qualify as if your interest rate is 6%. Mm-hmm. Now, if let's say, for instance, you manage to get some smokingly good deal on a mortgage, or you're a much lower interest rate overall, the lowest rate that they'll use in order to qualify you will be 5.25%. And this rate can adjust. Mm-hmm. So this is like the stress test rate. So it's either one of those two, whichever is higher. Mm-hmm. So that's essentially what the stress test is. It's to protect the Canadian financial system from overexposing itself, where people all of a sudden have payments that are become way higher than they initially anticipated, and no longer being able to make their mortgage payments because it's too expensive.
Yeah. It's kind of like parents wanting the best for us, even though we might not like it at the time, but especially now when we look back at the policy and everything, it is helpful. And I think Canada probably has one of the lowest default rate, from what I heard.
Yeah, it's like less than 1%.
Yeah, so, and I know a lot of people's mortgage is kind of up for renewal if they got the lowest rate. And then, so that definitely still helps. So then just to make sure that, people can actually handle that change. Mm-hmm. So again, I do feel like, at the time it was like, oh, now people can afford less, but in the long run, it's better. So it's not always a bad thing when, policy comes on and you don't understand why they're doing that. It's foresight, but,
They look really smart having done that when interest rates went way up. I think if, let's say, interest rates remained low from 2018 onwards, we'd all still be like, why is the government doing this?
But that's still hard to say. Like, again, like the financial crisis, the mortgage financial crisis, that was probably one of the things that definitely triggered this policy. So then people are protected. They understand you cannot just borrow to the max to that level. So then you're protected because life happens, right? Things happen, and then you might just not be able to afford your mortgage. But if you can, but everybody would like to keep their home. So this is a way to definitely protect people.
Yeah.
All right, so let's go into the approval stuff. So when we talk to clients or potential buyers, we always tell them, have you talked to a mortgage broker? And that's very important. And explain why it's important to kind of, when people, if they're just kind of like looking and they're not ready to buy, sure, you can put that off. But if they actually want to make that next move, why is it important to talk to a mortgage broker or a specialist?
Yeah. So what we've found, and what we've actually experienced with some clients who have maybe gone onto their online banking and they're like, you know what, it'd be really nice to be able to buy my first home. They go onto an online banking calculator. It tells them like, what's your income? Like, what other savings do you have? And it spits out a number and it's like, you could buy for up to this. And so sometimes people are like, great, my bank has confirmed for me that I can qualify for a place up to here. Hey, Carol, can you help me find a place up to here? Only to then find out once they found a place and they've written an offer and it's been accepted and they finally go to the bank, no. That was just some guidance.
Right.
That's your pre-qualification. What we really need is we need to get a formal application that's written out. It's a little bit more detailed than what you filled in online, and also your documents to corroborate everything you're telling us in the application. Okay, so you provide that, and then lo and behold, your lender is like, well, your documents don't really indicate to us that your income is what you said it was. And so some people are like, but I made that last year. And they're like, okay, yeah, but we don't factor in your bonus. There's other variable pay, things like that. So what we would want to provide to clients when they're working with us is what we call a pre-approval. And so that's where we've already reviewed your application. We've reviewed all of your supplementary documents to corroborate everything that's in the application, so that by the time you're out shopping with Carol, you're able to find a home that we've already discussed fits within your budget, you're comfortable with those payments, you're already you're able to qualify with a lender up to that amount, so that there aren't any surprises when you go to write your offer. So that's an important first step when it comes to the home buying process. Is don't just trust I know it's easy, and I know that's what everybody wants, is to just go online and not have to talk to a person and be able to do it, but you really do want to have somebody in your corner providing you with guidance, helping you avoid any potential pitfalls and disappointment and actual big risk of entering into negotiations or contracts to buy a place without having your financing completely dialed in.
Yeah, right now it's probably not in 2016 where like people are doing like no subject offers. So it's probably better because we always put in, unless very rarely you can in Vancouver get no financing at all, but we always write in a subject to mortgage approval process, just so then they're protected. But if it's back in the day where like people are putting multiple offers with no subject, if you don't have this already in your back pocket, you already know how much you're qualified for, you essentially have a firm deal, and then you will have to somehow find that money to finance for this. So it's so important to actually talk to somebody. It's kind of like you get a credit card, you can only go up to a certain limit. You cannot spend beyond that. You won't be able to. Otherwise, you'll have to find money somewhere else, right? So once they actually put in the offer and got accepted, having this pre-qualification, basically submitting all the documents, does that help with the process?
Yeah, so by having everything in place ahead of time, we can tell you very comfortably, these are the best lenders for you, right? Like, here's the most suitable lender that's going to be able to help you take advantage of buying your home, give you the highest amount of qualification if that's meaningful, right? Like, we want to know exactly the maximum limits of your budget or what you're qualified for. How the payments are going to work for you. So like, for instance, maybe you're paid bi-weekly. So like, let's try and make your payments bi-weekly. Is that going to help you pay off the mortgage any faster? By having all of this process done up front before you're under any stress, right? You're not under any, time frames or anything like that to buy a place. We can have you feel very comfortable with what's to come in terms of the next steps before you enter into that negotiating, position with buying a home. It's also from a position of, and maybe you can speak to this, if you're trying to negotiate with a seller on a home, and you can come in there and go, I'm pre-approved, I'm ready to go, I've got this all figured out, versus another prospective buyer who hasn't done any of that work and has nothing to show that seller that they are pre-approved, you're gonna look pretty good, right? So if they're choosing which offer to accept, you might even be able to negotiate a better price for the same home because you did your homework.
Yeah, absolutely. Yeah. Basically, if you can show the seller that you are ready to go, and compared to someone else, say, oh, they don't prove, for example, they can't prove how much down payment they can put in, or if you have all those things ready, if you have even like an email or letter, having a lender actually say, oh, this person is qualified for this much, it's going to make a huge difference when two offers is kind of on the same level, right? Because they feel like, oh, you're definitely ready. Because no seller wants to go through kind of like accepting an offer and then collapsing it and then having to put it back on the market and start that all over again. If they accept your deal, if they accept your offer, they just want this to go through smoothly. So that is definitely why it's so important to get the pre-qualification. So are there instances where people go through all those things, but they can still not kind of buy the home?
Yeah, and so usually what we would, now assuming we've already given you a pre-approval, we should be pretty confident that you're going to be able to buy a place. The one missing piece in the equation is the property itself, right? So if, let's say, for instance, you fall in love with something, but that property maybe has some issues, right? So as an example, let's say you're looking at condos, and there's a lot of condo buildings that are great, really well maintained, really well taken care of, and there are some that aren't. And so we want to make sure that the lender is also, as much as they're happy with you, they're also happy with the property that you're looking to buy. And they just want to make sure that whatever it is that they're going to be putting a mortgage against or financing isn't going to run into like some massive like, oh, actually you need to come up with another $100,000 to fix or improve this place. So before you can go ahead and be 100% committed to making a purchase, and again, this is where we would have a clause in the contract that basically allows for you to get your financing 100% approved so that the lender has an opportunity to approve the property. We would want to make sure that we've reviewed all of the meeting minutes, the strata meeting minutes that apply to a specific property to make sure that the lender is going to be willing to accept it, and that the value of the property that you're paying for, so like the price that you're paying for the property, is also what the lender or an appraiser believes the property is worth. So that's another element. And then once we have those two things, like basically the lender's accepted the property and that there's no issues with the condition of it, that's when we can provide a firm approval. And so that's where you've written an offer, it's been accepted, we've already done all the income stuff, we've already done all of the savings stuff, it's now just about the property itself. Once that is all approved by the bank, that's where you're fully approved, and you can remove those subject to financing clauses, those conditions that you put into the contract to protect you in case the bank won't lend you the money. Normally, like typical in Vancouver in particular, you're looking at a 5 business day window of time for subject removal. Sometimes it might be reasonable to extend it beyond that. Let's say, for instance, if the property's got some deficiencies, or maybe it's a real specialized property and you can negotiate for a bit more time to get this figured out. So it's all dependent on what the buyer and seller are able to negotiate, but I would say on average, it's about 5 business days. You also have a clause, it's a more recent change in the Real Estate Act, where you're able to get what's called a rescission period. So that's basically a 3-day window of time that if you just decide for no reason whatsoever, you just want to get out of the deal.
Buyer's remorse.
Yeah, you can do that. There's a penalty you have to pay though. Yeah. So if you can avoid it, it's preferable to actually have conditions in your contract so that even if you have a change in, let's say you can't finance the property or it doesn't appraise or you don't like the inspection that you would get done on the property, you can get out of the deal without having to pay any penalties. Those are some of the things that you can consider as far as like protecting you against anything like that. Now, as far as buying a property, the time frame that applies to that, we would say no less than 3 weeks. So that's like the typical 2 weeks is going to be really down to the wire and kind of a little bit rushed. 3 weeks is kind of like the perfect short-term period of time. Beyond that, completely up to you to negotiate. And that might apply to what your mortgage rate that we have preserved for you. So like those rates expire at some point. So we want to make sure that we can take advantage of it for that time. But like you might still want to like stay in your rental for a longer period of time, or you're maybe waiting for your home to sell.
Or sometimes the property might have tenant in there, and then you have to wait till the tenant to move out. Exactly. So that I want to bring it back a little bit. So once you get submit all the documents and you get a certain rate that you're sort of qualified, or the amount that you're qualified for at a certain rate, how long that window is, so then the lender will hold it and then people can go out and shop. And in between those times, what shouldn't they do? For example, should they buy a car or all those other things good thing or bad things to do or not to do?
Okay, don't buy a car. If anything, if you buy a car cash and you had an extra amount of money and you already discussed it with us, that's fine, we already discussed it. Don't borrow money to buy a car because that can really jeopardize your qualification and approval. So that's like, it's almost like a joke in the industry because like so many people like have entered into a contract to buy a place and have also decided to just buy a vehicle and take on the massive car payment. So don't do that. The pre-approval is usually good for 120 days. There's like a couple of some lenders that are like 90 days, most are 120 days. So 4 months of time that you have from the day that we secure the pre-approval to the day that you have to close on a purchase. Now, that's not a hard and fast like, oh, you can only do that, so you should only get pre-approved if you're planning on closing in that time frame. Life doesn't work that way. It might take more time to get things figured out. So pre-approvals can always be extended as well. So if, let's say, for instance, we're like a month away from your pre-approval expiring, maybe interest rates really haven't changed by much, we would just ask for some additional documents just to make sure everything's still good, you're still at your job, you still have the savings. Once we have that back in, we can reset for another 120 days.
Yeah, especially like just we mentioned, if for example, even if you have a deal that's firm and maybe closer to the end of that period, and then you are looking at a tenanted property, you have to actually get the tenant out, which will take quite a while, right? So then that can, as long as they just in communication with their mortgage specialist or their mortgage broker, they could very easily get that extended, correct?
Yes.
Okay. Perfect. All right. Thank you, Damon, for the advice. And as agents, we want, and mortgage broker, we want to work with you so that you can actually buy that home you really want to move into. And then it might not be your forever home, but it will be your home for the foreseeable future. And we just want to make sure it's not unaffordable for you. And so for our next episode, we will have Damon kind of explain to us the different types of mortgage and how those terms or like the different types like variable rate or fixed rate, how that's going to affect your purchase and your purchasing power essentially. So thanks again, Damon, for joining me today. If any of you have questions regarding your home financing, feel free to reach out to Damon at Pilot Mortgage. And until next time, have a good one.